On the line with us is Mark Fidgett. He's a member of the Verico Mortgage Network, licensed 26 years in the mortgage industry, and the driver behind this website, www.advancedequity.ca. Such a great topic to have right now, Mark, talking about the mortgages and the industry in itself. And I know, Blair, I said that you would get to start the segment off, but this is a crazy number. As of April 22nd, 2020, 710,000 mortgages in this country have been deferred. Wow, that's quite something, right?
It's it's crazy, and as we'll get into the conversation here, trying to get through on the phone to even talk about a deferral, the banks have just been slammed. I mean, hence your numbers.
Yeah, and if 710,000 got approved, it's probably north of 1 million people have, tried to apply or wish they were eligible or something like that. It's probably a pretty significant portion of the overall market.
Yeah, absolutely. But you have to understand that when this first started, there was no blueprint for this, and the banks were just as stunned as everybody else. So in the beginning, it was real Mickey Mouse, and it wasn't until the government stepped in and kind of gave the banks a little bit more of an assurance, CMHC as well. So then it started to have some kind of system to it, but still, those numbers are staggering.
And let's be clear here, Mark, because it's just something that I've learned recently. A deferred mortgage means that you are not paying your regular payments?
Well, yes and no. So the big confusion is some people thought that it's free. You don't have to pay, it just goes away, and that's not the case. I think the real word that's missing is the word now. You don't have to pay it now. For example, what the banks have done is they're deferring up to 6 months now. So if your payment is, say, $2,000 a month, and let's fast forward 6 months, you've now deferred 6 payments of $2,000, so $12,000. So what happens is people are even thinking, well, in 6 months, do I all of a sudden have to come up with $12,000? No, it's actually added to the back end of your mortgage. So you're gonna owe just north of $12,000. But it's going to be added to your total. So if you've got a mortgage owing of $200,000, now it's $212,000 and change, and there's a bit of accrued interest, but it's cheap money. So if you need it, it's a great program.
I see. Okay, cool. Thanks for answering that, because I was confused as well. So that's great.
Yeah, and Mark, who is the typical person that's looking to defer their mortgage these days? What type of factors are banks looking at on whether you qualify? What's been your experience there?
Well, who's looking to defer their mortgage? I think this is the real icebreaker here, Blair, and I actually heard you say it earlier in the week. When the tide goes out, you see what's going on and who's wearing their swimming trunks. The unfortunate thing about this whole dilemma is there's no real one painted picture for who is deferring their mortgage. I mean, pilots have been laid off. I mean, you would think, hey, that's a great occupation. You've got maybe you go out and you're a pilot and you get a great mortgage and it's high, but hey, I got guaranteed income. So really, there was no certain class or income. It was basically everybody who was affected. A lot of them just were very tight to being, 1 or 2 months away from not being able to afford a payment.
And that's been a big revelation, I think, for a lot of people, Mark. And I remember, I saw with the government shutdown in the U.S., you had so many, federal employees, great jobs. And in the space of 2 weeks, people were down, rationing medication, not able to afford groceries. So it seems to speak to, in general, the average consumer, a North American consumer, doesn't have a whole lot of an emergency fund, a whole lot of savings. So, someone like a pilot who's probably earned a good income for a period of time, if professionals like that are seeking a mortgage deferral, it really doesn't speak well to the average person having a lot of savings or an emergency fund there.
Well, and this is just my experience, but my experience with clients of all different incomes is they all seem to live their life according to what they make. So in a situation like this, when you think everything's guaranteed and nothing's going to change tomorrow, and if you're living at maximum capacity in terms of spending, this is where it really comes back to hurt you.
And Mark, I think that's one of, they talk about that this period of time that we're in, at the end of it, there will be a whole bunch of sort of new realities. And I always think about it as lessons learned. And I think that might be one of the most important lessons that we are going to come out of this with. that, that pushing to the limits, needing to have everything, wanting to have everything right now in a big form or a small form or in a luxury form or whatever it is, as opposed to taking a breath or taking a step and thinking, boy, do I really need to get that now? Do I need to purchase that now? I know that that's something that I go through, and I'm thinking that other people are doing that too.
Well, absolutely. I mean, when you think about right now, they're talking that people are actually saving more now than when they were, a lot of these people aren't working, but they're actually learning to save more. They're not spending. So, and I think you're right that when people come out of this, you hate to say it, but sometimes the best lessons learned are the ones that come the hard way, and this is what I think will happen too. I think people are going to spend less just because they've experienced something that they never thought would ever happen in their life. And could it happen again? Hey, you never know now, right?
Yeah, and I think having to stay home, being asked to stay home or to limit our activities, I think that even just for however long that lasts, and it may be over by the time this segment runs in the big way that it is now, that makes a difference for people.
For sure. I mean, it's, the other good thing that I think has come of this is people have, like you sort of talked about it, more time with their families, sort of experiencing the things that are really important. Is it that nice car? Is it that motorcycle? Is it, that fancy watch? Or is it really, what's important? And I think that's sort of changing a lot too, which is a great thing.
Yeah.
Mm-hmm. Yeah, what I'm hoping comes out of this too is a whole lot less stigma around debts. That I think there's going to be, so much financial impact, so many people having a tough time that, I think finally they'll start to throw out into the open the fact that the average consumer is overextended, and we shouldn't be judging ourselves. We should just be able to move forward and actually take some steps to fix the problem rather than be, so down on everybody for getting into it. Mark, I was curious from your perspective, are there clients who you think shouldn't investigate, a mortgage deferral, whether they wouldn't get approved or it's not the right decision for them?
Well, I think the key component is, are you experiencing financial hardship right now as a result of, this pandemic? There's talk, I've read things about, don't do it, it's going to accrue interest. But when you think of this, Blair, your interest rate is at your contract rate. So if you've got a 3% interest rate or a 5-year term, that's it's such a small interest rate. So, the question is, if you can afford to pay your mortgage payment, then go ahead and pay it. But if you are having hardship, you've lost a job, or, your income's been reduced, or you're having to stay home to look after someone who's not well because of, this virus, then you know what? This is a great thing. I think the interest rate's so low, you're not going to have to pay it immediately. It gets tagged to the end of your mortgage, so it's insignificant. So I would say, absolutely, if you can say that you've been affected by the virus in some way, then yeah, you're likely going to qualify.
Okay, and that makes good sense. Yeah, as you're speaking here, you're absolutely right. If the difference is you got a credit card bill that you've got to pay, and if you don't defer your mortgage, you're not able to pay it, well, your credit card is probably 20 to 30% interest, and your mortgage is 3%, so that's not too tough of a calculation to make. That's a better use of your funds.
Absolutely, and then there's, you bring up the idea of credit card. I think, what I've told to a lot of my clients is just make a list of all your debt, and sort of, if you've been affected by this, start with your mortgage, if you have one, or your rent, or whatever it is, and go down the line, your credit card, call them up. I think everybody within reason is working with people because they know this is something that we've never experienced before, and everybody's having a tough time. So, don't be afraid to reach out there, but be prepared to be put on hold for quite a while.
Yeah, fair enough, right? And from a credit rating point of view, Mark, I get this question a lot when you're dealing with creditors. If you're deferring a mortgage payment, what is the impact? Is that going to affect your credit?
Well, I'm hoping not. So they're saying that if you've been approved for a deferral, then the banks will not be reporting to the credit bureau because typically, as you know, Blair, you miss payments, it gets automatically computer generated and reported to the credit bureau. So it's one of those things where the bank actually has to make that change. So I'm telling all my clients that it shouldn't affect your credit. It's not supposed to, but if you can get something in writing from whoever you're speaking to at the bank, so at least at the end of the day, if you go back and find out that, hey, this affected my credit and the bank told me that it wasn't, then at least you've got a name and some type of communication to go back and try to, sort of get it sorted out at the end of the day.
Yeah, that's just so important because I deal with clients, quite often. Okay, there's an inaccuracy on the credit report. If you've got something in writing, I can send them the documents to say what should be on there. It's very easy to get it corrected. If it's, well, the bank promised me they wouldn't report this payment late, but you don't know who, you don't know when, you didn't get it in writing, you're not going to be successful in getting your credit rating, fixed if there is an error made on that.
Absolutely, and we've all, not all, but you and I, Blair, we're in the same sort of dealing with credit issues, and we know that the amount of inconsistencies on a person's credit bureau are crazy.
Mm-hmm. Yeah, it's almost rarer to find one that has 0 errors than to find one that has a bunch. They almost all have at least a few things.
No, for sure.
That should be corrected there. So, Mark, I'm curious your overall advice, of clients who are, in a mortgage now, they're considering about mortgage deferral, or even more broadly considering, what do I do to get through this next, period of time, however long it's going to be. What type of advice would you give to consumers at this point?
Well, we talked about this a while back, but right now, and I think it's in the news, obviously the virus is huge. Our health is priority. I truly believe your financial health and your physical health and mental health, they're all connected. So we all know the negative impact that stress can have on our health. So if deferring your mortgage reduces stress in your life, whether it be financial stress, mental stress, any kind of stress, then you know what? They should be taking care of it. A person's health and their family are priority, and if this can assist them, then hey, you know what? They should be absolutely applying, if they haven't already, to defer their mortgage.
Okay, that's great. Elaine, any other questions, or I think we're bumping up on time here?
I was just thinking, just in the last 30 seconds, I know, Blair, that you talk to so many people and your business has been very, very busy as a result of what's going on, that you are hearing a lot of stress in people's lives and in their voices when they're talking to you. And it sounds like good information that we need to look after our mental health as well as our financial health and physical health.
Mm-hmm. Yeah, I think everybody just has to take a step back, and I know it's stressful, but take a deep breath. Nothing's going to happen immediately. It's one of those things where the courts are closed, nobody's coming after you, nobody's taking your house, so just sit back, take a deep breath, and sort of figure out what the next best step is, and if that's to defer your mortgage, then you know what? Do it, and I'm sure you're going to feel better once it's done.
That's great. Thank you, Mark. We've been talking with Mark Fidgett. He's a member of Verico Mortgage Network. You can find him at www.advancedequity.ca.